Hello everyone, this is Will Hassel once again. This video is basically my watch list for the upcoming week, just different stocks and events to watch out for this oncoming week, really, is what we're going to be, that's going to be my time frame. First that I would like to go and show everybody would be the earnings upcoming this week on Starbucks. I'm looking at my Barron's right now for this week's preview, and it says that they report Wednesday the 30th. Now, Starbucks last quarter was just completely blew out earnings, and I'm, to be quite frank, looking for that to happen once again. Because really, Howard Schultz, was out on CNBC last week, as I talked about in my first stock trading video, talking about Teavana, all the new stores that they're opening up, and how they kept expanding into China and Asia, and just how he's expecting major growth in the next couple of years, and I think the earnings will reflect on that. Now, as we look at the 5-minute weekly chart, we see Starbucks had pretty much a powerful week going on right up until here, which, let me check the calendar, was Wednesday, a week before they posted earnings, high of around 81.10, and then it just sunk back down, profit taking. I'd have to imagine more profit taking here. We've got that midterm bearish technical of the 50-day crossing, both the 50-day and the 10-day going underneath that 200 moving day average. Had that going on all here, all throughout here. 10-day across the 50 explains the pop over here. And then we saw this happen right over here. The 200-day acting as support, really, right here, because as you can see, it just completely bounced off, and I think that also has to do to people getting their positions on for predicting earnings. You'll see that again this time around. I remember sitting at home watching earnings because it was the summer, so I was able to stay home and trade. I remember watching Starbucks. It was throughout the day, it had a little bit of volatility going into it. Then it was flat for a while. Then all of a sudden you start seeing these spikes coming through and big orders coming through, and it was all the different institutions and different people putting their bets on. Because I remember it was flat for a good 2 hours, just trading in about a 5 cent range, and then all of a sudden you start seeing 10 to 20 cent moves just keep going up and up. So that's my big earnings play that's going to happen this next week. Also, you guys know I'm in Michael Kors. They report on the 5th of November, so not too far away for them. Another company that I'd like to highlight here in earnings is Biogen, ticker symbol BIIB, which I will pull up for you. I have to say, I have had such great luck with this company. I was in them about 2 years ago when they were at 125, and now they're, up here at 252. I got it around 235, something like that. I had 3 shares because I didn't have too much in my account, and they are a great biotech firm. They do a lot of good business. They just come out with great drugs. It's actually my favorite biotech. Consensus estimates on their earnings is $2.11 a share. A year ago, that estimate was $1.91 a share. They're just becoming a bigger and bigger biotech firm, and they're one of those companies that I think in a couple of years they'll be up there with Merck in terms of famousness, which Merck also reporting. They're reporting, both Biogen and Merck are reporting third quarter earnings on Monday, and Apple is as well. Now, Apple is a stock that I don't like necessarily getting into because, one, I truly don't see that much of a hubbub about the products. I know I'm probably going to get some hate for this, some comments, but to be honest, I don't really like Apple's products all that much. I give credit where credit is due. Their MacBooks, really light, really durable. iPads, I mean, I use my mom's iPad all the time. In terms of ease of use, Apple has it down flat, but what I don't like about it is their products just seem to die in a year, which you can go and attribute to some brilliancy in engineering and design that they make it so that their products die out in a year or something like that. But personally, I don't like that. I like having my device for a year or two, at least, to know that the company, still cares about it. I mean, the only Apple product I really have is one of the iPod Classics, just because I just needed a huge thing that I can store my music on. I mean, it's 160 gigabytes and it's only like $120, which, gotta love. And Apple can't really disintegrate it, really, is what I call it, or the Apple effect, where they just make a product that just dies in a year, because they really have no meaning to do that. But I have here on the Barron's that the consensus estimates is $7.92 a share. $8.67 a year was what it was last year. To be honest, I think you'll probably see a beat on earnings just from the iPhone 5S sales. 5C didn't really do a whole lot. It was still the 5S that really got there. Am I a trader of Apple? No. I do own it because I do own QQQ, and they're part of the NASDAQ. In my opinion, they are too much of an overweighting in the NASDAQ. I don't like their weighting in the NASDAQ whatsoever. I think it's way too high. Apple, I'll just bring you a longer term. I'll do the 60-minute, 4 weeks. I had actually a pretty nice uptick up to here, but Apple has it's really been caught in a trading range pretty much all through here. You can even argue over here at the 500 level, it's just been that psychological level, and it's only really gotten up here because of Carl Icahn. Let's be honest here. I mean, the guy's a great investor, but I seriously think he's just towing along all the Apple investors and Apple traders on for a ride, and that's it. I think what you normally see with Apple earnings is they normally somehow they have a declining sales in something. I think last time it was iPads and Macs and MacBooks, but with their newest launch of the new MacBooks, I think if you find declining sales in there, it's not going to be too much. Once again, with Apple, a big thing that I hate is that they keep a lot of cash on hand for some really unknown reason to me. I don't know why they keep such a large pile of cash on hand. It kind of makes me mad, because it just shows that they are not really pushing enough capital through certain aspects. I know the other argument that you can make for that is Amazon keeps almost no cash on hand because they're always pumping money into different things, and I think there needs to be some type of a happy medium. Another thing just to watch out for, I'm really watching it just for the entertainment value, is Tesla. Ticker symbol TSLA. If anyone has traded this in the past, especially if you're long, you've made money. Let's be honest here, but I traded this throughout the summer at about 5 share blocks. Once again, expensive stock. I had about $3,300 in my account, so I can't really trade that large a size, but it's been a roller coaster as of late. If I remember right, from a technical standpoint, from I saw Economics great guy to follow on Twitter, had it that it's rising wedge shape pattern for the technicals. I'm not going to go into too much technicals because I'm not really a technical trader or anything like that. I mean, I use them on the charts to go and help me out, but I mean, just looking at the chart, it's just had a rough time lately, and especially in this last couple of weeks, it's been just brutal. I mean, I have really only been watching it through just to go just on stock twits or CNBC, like just to go and watch what it's been doing, because it's been bumping around quite a bit. As you can see over here, last week, down, and it's been having these super volatile moves too, where it'll start off, up like 1% or near 0.5%, then just be down 3%, and just, I mean, I had a tweet later last week that just fully expresses what I think of Tesla right now. It's in day trader territory right now. I wouldn't put any work to this stock right now, just because I really don't see where it's gonna go at all. If you're a longer term trader investor, I mean, you could do it. I'd just be super careful. If you're short term and you can't watch it all the time, be very diligent and very disciplined in your stops. I use stop losses on this like no tomorrow, and I almost never use stop losses. I'd also probably buy into options or short at least some shares of it or something to go and hedge yourself out. I mean, I normally don't recommend options just because I don't know a whole lot about them. But, I mean, if you're going to be, long 100 shares, I'd buy some puts, definitely. So yeah, just watch that just for pretty much the entertainment value, just to watch the bull bear battle going on. I mean, you could play it if you want, if you're really into that volatility stuff. It's really now day trading. That's all it is, because you've just been seeing a lot of day trading moves going on in there. Another stock that I think really needs to go and catch people's view is Google. I mean, what can you say? Some people called it lukewarm earnings, some people call it dynamite earnings. Whatever it is, Google got a pretty sharp spike up. They're in that $1,000 territory. To be quite honest, I'd be long Google, just because I think personally, and I've thought this for quite a while now, I think they're going to buy BlackBerry. I'll go outright and say it. I think they're going to buy BlackBerry. And why do I think this? I think they love BlackBerry's security service. I could definitely see them integrating the whole BlackBerry security software into not only, Chrome and all that stuff, but also into their Motorola side, because they own one handset. I think they're going to buy BlackBerry as another handset. I mean, I wouldn't do that as a speculative play on BlackBerry. I just think Google will do it, just because it really just makes sense, I think. I mean, they'd have two handsets. They have enough cash that they can go and make it work. They really turned around Motorola and are creating some really awesome stuff in terms of technology-wise. I mean, my dad went to AT&T this last Saturday, and he was playing around with the Google Nexus, and he loved it. He said it was really cool, and the voice recognition software is really cool. So, I mean, if they can do that with Motorola, I think they can go and turn BlackBerry into a powerhouse once again. I mean, I'm not long BlackBerry. I don't get into BlackBerry because my saying on it is good phone, bad stock. I love BlackBerry. I love the phones. Although my dad said the Q10 he didn't really like because the demo was weird, the keyboard was kind of off, and he's been a BlackBerry user since I don't know when, since as long as I can remember. And he's thinking about going to Samsung or even the Nexus, not iPhone. I personally like the phones, but I just think Google, for right now, for the sheer amount of cash that they have and a whole lot of their projects coming out, Google Glass really hasn't hit the mainstream market quite yet. I've been hearing rumors that they're having a barge of a data center or something like that. Some stuff on Twitter that I saw. They're probably going to open up a store or something. They're coming out with the Chromebooks, the Google Nexus Motorola phones, the Google Glass. It's just going to make sense. They're going to open up a flagship store, and that's going to just drive up attention like nobody's business. And it's going to be interesting because I think Google's going to is in this stage where they're just translating from being just a total internet browser company like they were for as long as I can remember, through the tech boom and all that stuff too. They're really starting to integrate into the whole from software to hardware phase, and are soon to become really a retailer. Kind of, Microsoft kind of went through that phase in the early 2000s with the Xbox, and we're seeing that again with their acquisition of Nokia. I think it's just Google's just been waiting on a matter of time and opportunity. And I really do see Google as being a really good long-term play. Once again, Scott trade. Once again, since it is $1,000 a share, you can find ETFs for Google's really heavily weighted, or you could buy options. Like I said, normally I don't recommend options just because I don't trade them. I don't really have the confidence to trade options. I know a lot of guys in the leaders investment love options because you could go and get high returns for little risk, this and that. I mean, I've learned a little bit more about them. I feel comfortable in just doing calls and puts, not put spread, put calendars, call calendars, iron condor, butterflies, and all that stuff. If you're kind of like me and you've been stocks for forever, and you kind of want to do some options, I mean, I'd buy Google calls. To what strike? Probably just some of the December. I think just to throw out a number out there, I think December 1,050 would be a good buy. I can see by December Google getting up to 1,050. That's a 35-point move. I can see Google doing that easy. Just a way to play Google, because I really do think in the long run it's a great company. And if you've had stock, really hold on to it. Another company to watch, this will be the last one I promise, is JP Morgan, because once again, JP has gotten into legal trouble, and as much as it really does kill me to watch them with their legal trouble, it honestly does as a shareholder. I've been long them since the whole London Whale incident. It really was going to be a trade, but turned into an investment. And I mean, the only thing that's killing me is, as you can see from my portfolio gain loss on JP Morgan, my average unit cost was $37. So I don't really want to open up a whole new position into them at 52. I would have by now, just as like some trades, because I honestly think they're going back up to 57 into their highs. But once all this legal trouble's gone through, because fundamentally they're a great company. I mean, they had a loss, but that's because of their billions in legal fees, even with the whole Jamie Dimon putting aside funds and all this stuff. I really do think that right now, with the lawsuit with the government that they just settled from, I just think people are just coming out of the woodwork and suing them just because they saw the government did, so they're going to do it as well. And that's all I really see, because they have a crackerjack management team, solid bank. Overall, they're just a good company. They're just going through a lot of unlucky times, and I really do think if you want to put capital to work, about the $50 line would be it, if not 51, just because I really don't think they're going to crack 52 anytime soon, unless they announce some really type of major deal. As you can see, 52 has been it really is a psychological point for JP Morgan. Down here, under 52, sunk down. 52 line up here. As soon as it got up there, it popped up a little bit down, but then hit the 52 again, up. Broke down under 52, at 52, down, and then up some more. It really hasn't gotten anywhere near it until right over here. 52.07, but I think 52 was probably going to be a safe bet of probably putting a stop loss on there, just because it's for me, it's felt. It's always been a psychological viewpoint for me for 52 is kind of where JP Morgan gets a little iffy for the current price basis, and not price evaluation, but just in terms of tradability, it gets a little iffy there sometimes. But overall, I do think it's a strong company, and I think that will just about do it for me. Everyone, once again, I thank you for following me on Twitter, following me on my blog, watching these videos. I know I post them really late, normally because I forget about it until right about when I'm going to go to bed, and I remember, oh, I wanted to do this, and I want to talk about this. So, once again, I thank you for bearing with me and for following me on all the different social media networks, and I'd also like to just put out a shout out there that a lot of my fellow colleagues in the Leaders Investment Club are going to be in a Business Insider article called 20 Under 20. It's going to be awesome. I cannot wait. I'm in there, Julian's in there, Ben's in there, Austin's in there. Just a whole lot of great people are going to be in there. Oh, Windows, no. Just a whole lot of people that really deserve to be in there and have worked their butts off to get in there. And one more final note, my dad and I this weekend crunched the numbers on my trading so far this year, because I wanted to know to know how I've been doing. I feel like I've been doing really well. My dad went and looked up on the different tax softwares that he runs, basically taking what I had at the beginning of the year, January 1st, is where we started off on, and up until now we minused out the different deposits. There was one deposit for about $200 for my savings account, another one for around a little bit more than $1,300 for my savings account, and then we just kind of took those out of the equation, took that number divided by the current number, and it came out to be about 50% before taxes. So, I'm off to hopefully what will be, let's knock it on my desk here, my wooden desk will be a great end of the year and a great trading year, and hopefully, I can keep it up for, this is the seeable future. And once again, I'd like to thank everyone for watching. Bye.